Welcome to Academic Academy SA. If you're new here, welcome. If you're returning, welcome back. Please don't forget to like, subscribe, share this video, and turn on your notification bells so you never miss an upload. Now, let's get started. Hello guys, welcome to this video where we'll be covering companies' unique ledger accounts, right? So here, there are 7 main accounts that you need to know. So it is your ordinary share capital, your retained income, your SARS income tax, your income tax, which are linked. You have your shareholders for dividends and dividends on ordinary shares, which is also linked, and you have your appropriation account. So we must first know what is the meaning of these accounts so we know why we do certain adjustments and why we record these accounts in the way that we record them, right? So your ordinary share capital, right? Your ordinary share capital records the value of the shares that were issued, right? That were issued by the company. Then your retained income, right? It records how much money the company is retaining for the certain period. Now, with retained income, right, when a company makes a profit, it obviously needs to pay its taxes, then it needs to pay its shareholders. However, sometimes it will not pay its shareholders as much as it is supposed to pay them in order to save money for further expansions. Therefore, the retained income, once again, it just records how much money will be retained for the financial year. Then you've got your SARS income tax, right? So your SARS income tax tracks all of your provisional payments. So if you make any payments during the year, right? During the year, and then if you make any payments at all, the SARS income tax account, this is what's going to track it. So yeah, you need to know that one. Then the income tax, right? Remember, these two are linked, right? These two are linked. So you must know how to differentiate the two, right? So here, the income tax, right? The income tax, it shows the total amount of tax as a liability. And it is a liability because the company, in this case, is owing SARS, right? So then you've got your shareholders for dividends, right? The shareholders for dividends. Now this records the amount of money that is owed to the shareholders of the company, right? So obviously, when a person invests in a company, they buy shares, right? Then at the end of the year, after the company has made a profit, then the shareholders, right, they also need to make their own profit, so they receive a dividend. Therefore, this then just records the amount of money that is owed to the shareholders, right? Then you've got our dividends on ordinary shares, right? Now this one here, this one records, right? It records every single dividend payment that is made to shareholders. So if we pay a final dividend or a interim dividend, right, you can expect it to be recorded in this account right here, right? And then we've got the last one, right? The last but not least, which is the appropriation account, right? So this one, it just basically distributes the company's profit for the year. It shows, okay, so this company made X amount of profit, so Y was distributed to this, Z was distributed to that, and B was distributed to that. So now let us get into the actual ledger accounts. So before we get into the ledger account, right, you must first know what this is, right? So first of all, here we have our average price, which is 10 rands, right? Now this is just a hypothetical example. So our share price, our average share price is 10 rands, and our share buybacks are 15 rands, right? So we must know exactly where is this money here distributed, right? So later into this bootcamp, this accounting bootcamp, we will be teaching you about cash flow, right? The cash flow statement and all of that. So the full 15 rand, right? Because then the value of the share is 10 rand, but we buy it back for 15 rand, right? So this means that the 15 rand goes to your cash flows, right? And then we know that when we look at ordinary share capital, we deal with average share price, right? So this 10 Rand goes to ordinary share capital. So when we record something, if we record a share buyback, right, in the ordinary share capital, we use the average share price or the value of that share at that given time, right? And then here we've got the 5 rands, which is recorded under retained income. Now, why? This is because we know that the value of the share is 10 rands, right? But we want to buy it back so badly that we're even willing to pay back 15 rands. Now we have the 10 rands, right? Because that's the value of the share. So where are we going to take the 5 rands? Now remember, we said that the retained income, it measures how much money is kept back by the business, how much money is retained. So this money that is retained will be used to top it up in order to be able to buy back the shares, right? So let's just go over the formulas to calculate the average share price, right? So the first formula to calculate average share price is basically simple. So you have your ordinary share capital, right? Ordinary share capital amount, right? Amount, money, right? So when you see this, you must know that it's money. Just put rands here, right? Then it's over the number of shares issued. Now, when we get into the notes, you will understand why we use these formulas and so on. So as much as we do have this formula right here, right, which is our go-to formula, some of these situations are not the same, and sometimes you need to apply a different formula. So the next formula is if, right? A big if. So if there is a repurchase, right? Please listen carefully. Please put on your captions if you have to, right? So if there is a repurchase of shares after we issued out additional shares, then we need to apply this new formula here, right? So this new formula is the value of shares at the beginning, right? Right? Then plus the value of additional shares issued, right? Over. Now remember, with this formula, we know that on top it's money, right? On top it's money. Then on the bottom is the number of units, the number of shares. So similarly, it's the same thing here. So here it is money, right? Then under here will just simply be the value of the shares at the number of shares, I mean to say, number of shares at the beginning plus the number of additional shares issued. Now, I hope that you understand it so far, because now what we're going to do is now we're going to get into the notes which incorporate this right here. So if you did not understand, please make sure that you go back, you look at this part again so you understand why it is the way it is. So to recap, right, we know that if the value of our shares is 10 Rand, right, but we want to buy back the shares from a shareholder. Now, if a shareholder wants to sell their shares, they are not going to sell their shares for 10 Rands because they most likely bought the shares for 10 Rand. So they won't be making a profit. So the shareholder also wants to make a profit. So let's say us as the business, we are able to buy back the shares from the shareholder for 15 Rands. Now, we have 10 Rands, right? Because this is what the value of the shares is. This is what we can afford. However, we somehow have to take another 5 Rand to top it up to be able to afford to buy these shares back. So we know that the ordinary share capital, this is where the 10 Rand is from, right? From the average share price. Then the 15 Rand it goes right to the cash flow, right? So as you go deeper into accounting, you will be taught about the cash flow statement and so on. So this 15 Rand goes all the way there as is. So this means that it is important for you to understand this topic thoroughly, because you won't just leave it here. You will also be using this topic in the cash flow statement. So now, since we have 10 rands and we need 15 rands to buy back the shares, we need to take the money from somewhere. So we take our money from the retained income account, right? So now to calculate our average share price, there's two methods to calculate it, right? It is the first one, right, which is the standard formula. So it's just basically the value of the ordinary share capital amount over the number of shares issued. That will give you like the price of each share. To say for maybe one share it is 2 rand 50 cents, right? That would be the average share price in that case. However, if there is a repurchase of shares after we issued out additional, right? After we issued out additional shares, then we need to apply this formula here. So we have the value of our shares at the beginning, right? Plus the value of the shares that we issued out, the value of the additional shares that we issued out, over the number of shares at the beginning and the number of shares that were additionally issued. So now that we understand this, we will now be moving on to the two notes, which is the ordinary share capital and the retained income. So when you now talk about the ordinary share capital, this is what you can expect to see. Now, in most cases, this will be fully drawn out for you. Then you just have to either fill in the missing amounts or to just do it from scratch, like we are going to do it here. However, this is not going to be a practical example. This is just like the formulas and the basic notes before we get into it practically, right? So the first thing that you can expect is the shares issued out at the beginning, right? The beginning, right? So basically, at the beginning of the period, the company is going to issue out a number of shares, right? Then these shares will be given. So we'll just substitute the numbers with X, right? You will be given maybe this, and then if you're lucky enough, you'll just be given the amount, right? Then like you just move on to the other one. However, if you're not given the amount, then you'll have to work backwards. So now we will discuss that as we go deeper into this topic, right? Then the next thing that you can expect to see is repurchases, right? Right? So here you must always, guys, whenever you do your repurchases, you must always have brackets here, because brackets indicate that we are deducting. And we are deducting because if this here records the number of shares that are given out, right? The number of shares and the value of the shares that are given out. So if we are buying them back, this means that the number of shares that we have given out are going to decrease. That's why we put the brackets for repurchases, right? So here you always use the value of the share, not the full amount, guys. You don't use the full amount. So for example, like on the previous part of this video, we saw that the shares were repurchased for 15 rands, right? Or rather, let me write it in the middle here. We saw that shares were purchased for 15 rands, and we know that the value of the share is 10 rands, right? So this means that this amount is what goes to the cash flow statement, right? Which you will cover later on in this accounting bootcamp. So we are going to record the 10 rands here, which is the ordinary share capital amount, the value of the share. This is what we are going to record here, guys. Please do keep note of that, because this is where most people make mistakes. They confuse the two, then they lose their marks. Find that someone could have gotten 80%, but they're now getting a 70% or even lower. So the next thing that you want to expect from this is your additional shares issued, right? Right? So here, right, we know that at the beginning of the year, we have issued out shares. Maybe during the year, we bought them back. And then somewhere during the year again, we decide to issue out more shares. What does this mean? This means that the ordinary share capital is going to increase because the number of shares that we are giving out is now increasing. So we put the amount, right? The number of shares here and the value of the shares here, right? We do not put a bracket because the number of shares that are going out to the public are now increasing, right? Now, once you have gotten to this point, you are about 75% done. Now, all you need to do is to draw your two lines now. So what do these two lines represent? I mean, we always put them in accounting, but no one really knows what they represent, right? So this first line here, right? This first line here, this one right here, right? This represents that we are either adding or subtracting these to get a value that is here, right? To get a value that is here. And then this second line here indicates that we have reached the end. After you cannot keep on recording if you have these two lines. We have reached the end. We can no longer calculate. That is like the end where we are done calculating. So obviously now that we know what these are, so this would be your balance, right? You could say your balance at the end, right? Now there's many ways to write this. So if your teacher maybe prefers you to write it in a specific way, then follow your teacher's guidance. However, if you don't know, you could just write balance at the end, or you could just write ordinary share capital balance at the end if you want to be more specific. But however this here, right, this will be written down and you just have to calculate the amounts. So here you know that you will take your shares issued out at the beginning of the period, you minus the repurchases, you add the additional shares, then you'll get your total number of shares issued for this financial period, right? And then here, right, here, you know that these will be your amounts. These will be in rands, right? These will be in rands. So you'll just take the amount at the beginning, you minus the repurchases, you add the additional shares issued, and you'll get your final amount here, right? Now, like I said, sometimes you will have to fill in the missing, right? That's why we have those two formulas. So please revisit the two formulas, right? These formulas will give you guidance as to how to go about it. Because you notice here, the repurchases are before the additional shares issued. So if you had to find the average share price so that you're able to find the missing amounts here, then you would use the first formula. However, if these things were swapped, right? If they were swapped, then you'd use the second formula, right? So yeah, please do revisit those formulas, write them down, paste them on your wall if you have to, so that you know that you're going to see them every day. And while we are this far, guys, please do subscribe. If you have any questions, don't be afraid to post in the comments. At this moment, we are a very small channel. We have about 10 subscribers. So if you're not subscribed, please do subscribe, because that's the only way that you can help this channel grow. The more you subscribe is the more it will reach more people like yourself. So let us get back into it. So now, hypothetically speaking, you are given this type of scenario and you have all of your amounts, but maybe you don't have your additional shares issued, and maybe you don't have this amount here, right? Now, in this case, what do? You will use the first formula. You will say your ordinary share capital, the value of it. Like, this is just abbreviations, guys. Do not use abbreviations. This is just to save your time. Over the number of shares, right? Right. So now this could be here, right? Now, after you get that, you'll get your average share price. Then with that, you'll be able to get the shares here. You will be able to have your number of shares here, which is maybe, let's say it is 10,000, right? Then after doing your calculations, you find that the average share price is 1 rand. So now you know that the total one here is 10,000 rands. And then when you work backwards, guys, if you're trying to find an amount here or here, what you're going to do is you're going to take this amount at the end, then you're going to do the opposite of what these things tell you to do. So notice how this one is subtracting. Now you're going to add it, then you're going to subtract this one which is being added, then you'll get this amount here. However, you'll understand it better when we do it practically. So yeah, we can now move on to the retained income note before moving on to our ledger accounts. So now we move on to the retained income note, right? So for here, what you need to know is that you will have your balance at the beginning, right? Usually this is given. However, if you're not given, you must just find the other amount, then work your way backwards, right? So you'll find your balance at the beginning, right? Right? After you are given that, what is the next thing that you need to look at? You need to look at your repurchases, right? And then this is the loss that we are going to incur. So remember how we had that triangle, right? So we know that the average share price was 10 rands, but the buyback price was 15 rands, right? Then we know that the 15 rands goes to our cash flow statement, and we know that the 10 rands goes to our ordinary share capital. So now we have this amount and we need to get to this amount to buy it back. So where are we going to take the money? We're going to take it from the retained income. So this is where the 5 rand goes. This is the loss amount, right? So with that being said, here you will write your loss amount, right? And also please do show your calculations. So when you do this, you will have like a short bracket, then you would have maybe like the number of shares, maybe it's 10,000. Then if like the loss amount is 20 cents, you could either write times 20 over 100, or you could just write times 0.20. Then that will give you the amount for this, which should be in brackets. So the first one is not in brackets, but the second one here, the repurchases, that should be in brackets, right? So yeah, after that, after you do your calculations, make sure that you close your brackets, right? Then the next thing you want to do is to write your net profit. Your net profit after taxes, right? Now this will usually be found in your income statement, right? So yeah, after you do your income statement, perhaps, or maybe like they could give you the profit and say that the tax was 30% or something like that, then you just have to calculate, right? So after that, then you will put your amount here, right? So now you have your balance, you have your repurchases, you have your net profit after tax. Then you would now move on to dividends on ordinary shares, right? So in this one, you have two things, right? You have your interim dividends and you have your final dividends, okay? So here, you know that for your interim is the ones that are usually paid during the year. Then the final dividends is usually paid at the end of the period. So you will be told, perhaps maybe you know that during the year we had 500,000 shares, right? And then they paid a interim dividends of 50 cents per share. So we know that we have 500,000, then you say times your 50 cents, right? Then that would give you about 250,000, right? That would be what you have here. And then when you do your calculations, make sure to put in your brackets, right? Then your final dividends, you know that it's usually at the end of the period. So hypothetically speaking, let's say during the year we had 500,000, but then we perhaps ended up selling 100,000 shares. No, we perhaps bought back, I mean to say, we perhaps bought back 100,000 shares. So since we bought back, this means that the number of shares issued will decrease to 400,000 shares, right? Then hypothetically speaking, let's say it's also typed like they also give out a final dividend of 50 cents per share, right? So you just do the same thing times 50 cents, which is equals to 200,000, right? Just like that. Then you would have this, right? So after you have these amounts here, right, what you will see is that it is usually done like this. Like these are usually kept a bit separate from this, because this is like the total of the two. So you would add these two to get this amount here, right? And then after you do that, you are now about 90% done. You've gotten all of your amounts. So then now all that is needed is to give your balance at the end, right? At the end, right? So obviously you would add this, you subtract this, you add this and this. Now do not add these two if you've already added this. That will be double counting and you'll get it wrong. Only add the total amount here, then you will get your amount here. So the first thing you need to do is to draw your first line. Now remember why we use the first line is to show that you are performing your calculations, right? Then you get your final amount. Then since we are done, you now close off the line. So we are now done. You can no longer write until the bottom here. So yeah, we have covered the retained income note. So now we are going to cover the ledger account, right? This is where most people lose marks. So please pay attention here. And I hope that you guys have your notebooks out. If you don't have your notebooks out, please do so. Write these down somewhere, keep them safe, and recite them on and on until you can't forget them, until you know them, okay? So we'll now be moving on to the ledger accounts. So now that we're moving on to the ledger accounts, this is just a basic overview, right? So a ledger account is basically a T account. It is shaped like a T. Then it is divided into two. So here you have your debit, then here you have your credit. Now, depending on the account that you are dealing with, they can either increase or decrease on one of these sides. So one side has a increase and one side has a decrease, right? So for example, if you're dealing with an asset, right, you know that an asset will increase on this side and will decrease on this side. However, if you're dealing with a liability will increase on this side and decrease on this side. Similarly, if you're dealing with an income, right, it will do the same. Increase on this side and decrease on that side. And even with expenses, this is what you can expect to see. Expenses increase on the debit side and they decrease on the credit side. Now, you probably might be confused, or you're asking yourself, well, why is it like this? Because expenses and liabilities are a bit linked. This is why, right? And this will be shown when we get into these ledger accounts, right? However, before we do them, we need to make sure that you fully understand, right? So let's look at income and assets, right? These two are related, right? So for there to be a debit, there needs to be a credit, right? This is a simple accounting rule. So when you look at income, you need to have a debit and a credit for it. So since income is going to increase the asset, right, it means that income must be here under assets, right? It means that income must be here. So since income is here, remember, for a debit, there must be a credit. So since income is here, then we know that this must come here. So income could be maybe sales, perhaps, right? Because we know that income is going to take the cost of, or the value of the assets up. That we do know. However, for there to be an increase or a debit entry on the asset, there needs to be a credit entry on another account. So this is basically what it does. So when you are dealing with two pairs, right, two accounts, just know that there will always be a cross, right? If you have a credit amount here on this account and it's linked to the second account, then it will come to this side of the ledger and so on. So now let us jump into the actual ledger accounts that are related to companies for grade 12 accounting, right? So for the first one, we have the ordinary share capital, right? So obviously we know that it is a T like this, right? So obviously the first thing that you guys must put is your free marks, right? Which is your opening balance. Now here you will usually be indicated, but with your ordinary share capital, we always know that it is usually in the credit side of it, right? So you'd have your balance here, which is your opening balance, right? Opening balance, right? And then what else would you now have? Well, you would have here the bank or debtors control, depending on how you receive the money, right? So what does this bank have to do with anything? So here, right, this is the cost of the shares issued. So remember in the note when we said additional shares issued throughout the year and so on, this is where you put the amount, right? And then similarly, on this side, you would also have a bank again. But why a bank on this side? Now we know that when we record ordinary share capital, we are looking at like the total shares that are given out, right, at the end of the year. So we have our opening, we have our additional shares issued during the year. What else is missing? This is our repurchases, right? Repurchases. This is where now you would be done with the ledger accounts. So yeah, I wouldn't say this is cramming. You need to know these. You need to know what goes where, so that in a test environment you just know, okay, I just take this amount, I put it there and put it there. So however, I would say that if you can't recall this all the time, cram it, right? Now it's not good advice, but cram it. Cram that you know that the balance and the bank for additional shares issued is on the credit side and the repurchases is on the debit side, right? So if you can cram that, then in a test environment you must just put that on paper, right? Which shouldn't be too difficult. So now let's move on to the second related ledger account, which is your retained income. Now this one tends to be challenging for most learners because there's several ways of doing it, right? And out of the many ways of doing it, I managed to find the easiest one. Now with this one, you are just plugging in information and you're going to get the exact same value, right? But don't just follow me blindly. After I teach you this, go to a past paper, and then you will see that if you apply it, it gives you the same answer as if it was done with a more difficult method or so on. So we know that we have our T account, right? So the first thing that you want to plug in here is your balance, right? You are usually given, it's usually in your trial balance or so on, you plug it in, right? Then the next thing that you want to put in is your net profit after tax, right? You plug it in, you put the amount here, right? So now you're covered on this side. So now you then move to this side, right? You then move to this side, then you have your bank, right? You've got your bank here, which is your interim, okay? Then you've got your shareholders for dividends. And then you also have your repurchases, right? Which is the loss amount, right? Because we know that when we deal with retained income, we deal with the loss amount when it comes to the repurchases. Now, what you will notice is that this thing is the same thing as the note. The only difference is that it is in a ledger format. So with this method, you can never forget it because it's the same thing as the note. So therefore, this one is like the most easiest one to do. So if you just plug in these values here, you will realize that you get the exact same amount. So obviously, after you do a T account like this, right, then now you just have to balance it. How do you balance it? Well, you put your two lines here, right? Then you find the biggest amount here. Hypothetically speaking, let's say this is the biggest amount. So you have your two values here, right, which is the biggest amount, right? Then now you take the biggest amount and minus it with the smallest amount. So since we said that this is the biggest amount, and this means that this is the smallest amount, so you'll take this minus this, then it will give you a balance, right, that you can carry down, right? At high school level, it will be carried down. At university level, you'll probably say carry forward. But since you're in matric and you are watching this video, then make sure to indicate it as carried down. Then obviously the biggest amount minus the smallest amount will give you a difference, which you'll get here. Then you are not done like this. Now it is your duty to take this balance to here now, right? Which is again your balance brought down. So here you were supposed to carry it down, of which you did, and you brought it down here. Then it's the same amount here. Then you get your full marks. So this thing of balancing it, you will even do it here. You find the biggest amount, then you subtract with the smallest amount. So hypothetically speaking, this amount is bigger, this amount is smaller. Then you have your balance carry forward here. Carry down here. Then your balance brought forward would be somewhere here. So I hope that you understand it so far. It may be a bit confusing now since like we are not applying it practically. However, once we apply it practically, then you will see that it's not so confusing. So now we will now be moving on to the next ledger accounts, right, which will be our SARS income tax, right? Let's start with the SARS income tax, right? Once again, we have our ledger here like this. So with our SARS account, we are first given a balance, right? And please pay attention to what I'm about to say, right? You usually in your adjustments, they will tell you that the opening balance for SARS has been paid. Now, the moment you hear that, right, you see this amount here, you take it right to the side. You just put a bank there, right? And it's the same amount. These two would then be the same amount because we were owing them this amount. However, we paid them that amount, right? So then everything is proper now, right? And then the next thing that you would then look at is any tax that must still be paid. Now, when you perhaps like we calculate tax and then during the year, there's some more tax that we need to pay, right? Any form of tax in that manner, you will just write it here and you write it as is income tax, right? So this here is the tax that is still payable, right? The tax that you are still owing. And then similarly, even on this side here, right? Even on this side here, you would then have your bank again. However, I bet you probably guessed it by now. This would be any payments to SARS, any additional payments that were made, right? Any payments made, right? So then this could be during the year, if we paid SARS during the year, because we've already paid them off this balance. So if we pay them again during the year, then this is where you put the amount. Then if we find out even at the end of the year that we still owe them, this is where you put the amount right here. Now we know that SARS income tax is linked to income tax, so let us also do the income tax. And once again, with this one, you would just balance it. You will just balance it, right? So you find the biggest amount, you put it on both sides, then you subtract with a small amount, you get your carrying down balance and your brought down balance. So here, this is your easiest marks, guys. Like, this is the easiest part of it, because here you see this amount right here, right? Now remember what we said, for that if there is a credit, there has to be a debit, right? This amount, you just bring it here, income tax, right? As is. Like, you see how easy this is, guys. However, since it's SARS, you must specify that it's SARS. You must specify which account it came from, right? So you put income tax SARS, right? The exact amount here, you just bring it forward to the side. Then on this side, you will be writing down something that we call appropriation account, right? Now, unlike SARS income tax only has one main amount, which is this one. So this one, so appropriation account will just take this one here, because then there is nothing here, so it's just gonna take this amount. So you can just do this, right? Then you could just close it, right? You could just close it after that. Then you're done with this one. So here, guys, please, if you ever watch Academic Academy essay videos and you fail this, then guys, you are just basically throwing away free marks. Like, this is the easiest one here. This is your lower hanging fruit. So always make sure that you totalize on this one, because all you need to do is just find the income tax payable. Then you take it all the way from here to there. Then you put the amount on both sides. Then you just close it off. It's simple as that, right? It's nothing too complicated. So please don't ever miss this one. This one is your easy marks. These are your lower hanging fruits right here, right? So let us move on to the next one. So the next one would be our shareholders for dividends, right? And much like SARS, it also has an account that it is linked to. So yeah, I will make sure to show you guys that. So here, right, the first thing that you have is your balance. Once again, this one is very similar to SARS income tax, right? So if you ever forget perhaps what I've taught you here, all you need to just remember is, how did I do SARS income tax? Then you just apply the same thing here. So obviously they will tell you that, like, the final dividends for the previous year were paid, right? Well paid. So what does this mean? You do the same thing. You take it to this side and you indicate that it was a bank and it was paid, right? So you put the same amount. So therefore these two amounts should be the same, because we were owing them and we paid them, then we recorded these amounts, right? So the next thing that you want to go ahead and do now is you want to put your dividends on ordinary shares here, right? Now you're probably asking yourself, what is this, right? So here, this is basically your final dividend. So remember that we have our interim and our final. This would be your final. So here you would have your number of shares, right, times the dividends that are paid, right? Times the dividends that are paid. Then you would get this amount here. Then once again, guys, you just have to balance it, right? Now you know how to balance it. Find the bigger amount, put it on both sides, then subtract with the smaller amount, right? Simple as that. So we are done with shareholders for dividends, right? So now I did say that this is linked to something else. So we now move on to our dividends on ordinary shares, right? Dividends on ordinary shares. So you see this amount right here, right? Before you forget it, because in an exam setting, time is very tight. So before you forget anything else, just go ahead and put this amount on this side. So you just write it, you will write it under the account name, right? It's your shareholders for dividends. But don't be confused. This is just the final dividend, right? Just the final dividend, guys. It's nothing scary, okay? And after that, you have your bank, right? So what is this bank? Now remember, this is for dividends paid. So since we have our final, we need to record our interim also. Interim, right? Our interim dividends, we need to record it also. Now, once we have these two amounts, this is what we do again, right? We just write appropriation account. Right? After you have done that, okay, you will just add these two amounts, then you put them on both sides. You put them on both sides like this, and therefore this account will just take the same amount as this one here. Right, now you're probably asking yourself, why are we just giving it these amounts? Well, you will see in the next ledger account, which is the final ledger account, right? So we are reaching the end of this video now, guys. We are very close to the end. So please, if you're not subscribed, guys, I mean, we've given you so much value so far. So please do subscribe. It's completely free. It doesn't cost you anything to press the button. So if you're not subscribed, please do subscribe, and also please share this video, right? Spread the word. All of our resources now are completely free. Please make sure to join the free WhatsApp channel, right? It is in our bio. So please make sure, if you just go to our bio, there's a link there. You press it, it takes you to our link tree. Then again, I'll show you our TikTok page, our YouTube channel, and the free WhatsApp channel. So please make sure to join it, because there we share free notes. We share several things there that are going to give you value. So please do make sure to check out that link and join the free WhatsApp channel, right? So we are now moving on to the appropriation account, right? Now I hope that you guys were busy writing these down, because this is where we tie it all together now. Now remember how we were writing appropriation account on the sides on some of like these on some of these accounts. Well, the accounts that have that, you will just put them here as is. The first account that had that was income tax, right? That was the first account that we had. Then the second one was dividends on ordinary shares. And then once again, guys, this one was not like the other ones. However, you must know why we put this here. So at the beginning of the video, we did say that the appropriation account distributes the company's profit, right? So we know that the company's profit is either distributed to tax, dividends to shareholders, or we retain it. So we have our retained income, right? Then just like that, all you need to do here is write profit and loss, right? Because obviously we are basically dividing the profit or loss into these three categories, right? So once you get the amount here, all you do is just add these three amounts up, right? So this one, and this one, right here, right? You just add them up and you get a certain value, which you put on both sides once again. then you put it here, right? And just like that, guys, you can totalize your company's ledger accounts, right? It's that easy. It is that easy. So we have done the hard part here, the formulas, the theory of it. So now all you need to do is just apply it practically, and then we will be sorted. Okay, so in the practical example, the scenario says that Florida Limited trades in proudly South African t-shirts. The company is authorized to issue a number of ordinary shares. The directors are concerned that the market price on the 1st of March has declined from 5 Rand per share. The auditors informed the internal auditor to investigate what contributed to the decline in the market price share. You have been requested by shareholders to present information relating to the following company accounts for the year 1 March 2024. Then there was a small error here to 2025 and not 28 February 2025, not 28 February 2024. So the first question says that we must calculate the average share price before the shares were bought back. Now remember, at the beginning of this video, we talked about the two formulas. So we're using the second formula here. So here, if you can look at the information on the first, right, the first piece of information there, we have our ordinary share capital, which is 475,250, right? And then we can just put a table here. Then the number of shares for this amount is 70,000 shares, right? Then we add the additional shares, right? Now the next pair of additional shares was 15,000 shares for 92,250. And once again, they did issue out even more, which was 90,000 shares for 360,000. So if you type this into your calculator, this will give you a share price of 5 rands and 30 cents, basically 5.3 rands. And then the second question, 2.2, it says we must calculate the price that the company bought back the shares for on the 15th of September 2024. So we need to calculate the price in which they bought them for. So here we know that they paid 390,000 rands for these shares, right? And how many shares did they buy back? They bought back 65,000 shares, right? So basically the price for each share here was 6 rands, right? So it's simple as that, guys. These are the lower hanging fruits. You see, it's very simple with the formulas that I have taught. So moving on now, we now move on to the main focus of today's episode, which is the ledger accounts. So the first ledger account that we are supposed to create here is for the ordinary share capital, right? Ordinary share capital. Right, so we draw our ledger, and then now we first look at what I have taught, right? So the first thing I said that we need to do is to give out the balance, right? The balance at the beginning, right? Which is 475,250, right? And then bank. So this is for the additional shares that were issued, the amounts in which they were issued. So since they issued them twice, we have one for 360,000 plus 92,250, right? Which gives us 452,250, right? So on the credit side of this account, we are done. So we now need to look at the repurchases, right? So we put bank again. Then we now look at the repurchases. So we bought back 65,000 shares. Now we use the average share price. Now the average share price was 5.3. Then this should give us 344,500. And if you can calculate to see which side is bigger, it should be obviously this side. So if we can just draw the lines here and calculate. So we're going to say 475,250 here plus the 452,250 right here, right? And this should give us 927,500, right? 927,500. So now we're going to say 927,500 minus this, right? Which will give us 583,000, right? And this is the balance that must be carried down. So here we go again, balance brought down, then we take that amount here, 583,000. So for ordinary share capital, we have gotten our full marks. We have done everything that we need to do. So now moving on, we are now moving on to the retained income, right? Right? So here, remember what we said. We first here write the balance and the net profit after tax. So our balance is 86,000 rands as indicated in the scenario. If you can look at the table of information, you will see that the opening balance is 86,000, right? And then now we need to find the net profit after tax. Now we're given the tax, which is 450,000, right? So what I like to do is I like to use the unknown amount over the known amount, right? So here we know that the net profit before tax is 100%, right? Before tax. Then we know that since the tax rate was 30%, we know that the tax is 30, right? This is the full amount, which means that the net profit before tax, no, I mean to say the net profit after tax, apologies for that, after tax should be 70, right? So we use the UK method, the unknown over the known. So here we have 450,000, right? Now our unknown is here, right? Which is the 70%. Our known is the 30%. Then after we plug this in, just write it here also. Make sure to write your calculations, guys. And if you can't write your calculations here, always make sure to indicate something. So what you could do is you could put a star like this, right? Then wherever you wrote your information on the paper, you put the star like this, right? That way, even a marker will know exactly what you're trying to say. And then this should give us 1,050,000. Now I hope you guys are doing this with me. You can't just binge watch this like it's a Netflix show. I hope that you are actively participating, right? Then here we know that we're supposed to give our interim, our shareholders for dividends, and our repurchases, right? So here, right, our interim is given, it is 75,000. If you can refer to the 30th of August, you will see that the interim is given and it is 75,000, right? Then here I want you to pay attention to the date on the 29th of February, the last one. It says that the directors recommended and declared a dividend of 3 rands, right? 3 rands per share to all shareholders that were at the general meeting. So in a case like this, with the final, you know that it's given at the end. So if there were any there were any shares that were bought back, then you must exclude them. So we know that at the beginning, we had 70,000 shares, right? Then we went on to give out even more shares of 15,000, right? And we went on again to give shares of 90,000, right? Then we bought back 65,000 shares. So this should give us 110 shares, right? And so all we need to say here with showing our calculations is 110 times 3, which is 330,000, right? Then for the repurchases, right? Now, if you were paying attention at the beginning of the video, I told you that for retained income, when it comes to repurchases, we write the amount which we lost, right? So here it is pretty simple. The amount we lost is basically, we are going to say 65,000 shares, right, times the average share price, which was 5.3, right, minus the amount that we paid now, right? So this should give you a negative amount of 45,500, right? 45,500. So here you could just write this here, and then you write 45,500, and just like that, you have plugged in all of your information now, and now it is time to balance it, right? So to balance it, let us calculate. So here we have 86,000 plus 1,050,000, right? 1,050,000. This should give you on this side 1,136,000, right? Then on this side, if you calculate in 75,000 plus 330,000 plus 45,500, this should give you 450,500. Now it is very clear that this is the bigger amount. So what do? We write it on both sides now, right? We write it on both sides. So we have our 1,136,3. Just make some space here for when we write the balance. Here we have the 1,136,000, right? Just like that. So now we're going to say our balance, which we need to carry down, and we're just going to say this amount minus this amount, right? So this should give us 685,500. And remember, you must take it down to here now. So you have your balance brought down, and it is 685,500. And just like that, we have now covered retained income. So this means that we have only 5 more ledgers to do in this activity. But as you can see, guys, what I taught you is here. So if you can practice the formulas I've given you, apply them into even more practical activities and past papers, then I can guarantee you're going to totalize this section of the paper. This is a very simple topic. However, it is only simple given that you put in the work. So we are now moving on to the next one, which is going to be the shareholders for dividends. Now this one is pretty easy and pretty straightforward, right? As indicated with my formulas, right? So here we first need to draw our thing. So we draw our ledger. We draw our ledger, right? Excuse me for the light font on this. I'm running out of markers. So we draw our ledger, right? Now the first thing we do is we write our balance on this side, right? Our balance. Now the opening balance for this was 120,000, right? And then if you can look at the first adjustment, it says that the amount due to SARS for income tax and to shareholders for dividends were paid. Keyword paid. This means that this is going to also come to this amount. It is bank, right? And it is the 120,000. Just like that, guys. These are easy marks, eh? Easy marks. And then now we are going to write the additional dividends that were paid for, like the additional final dividends that were paid, which was the 330,000, which we calculated in the previous one. So here, all you need to do is to write dividends on ordinary shares, right? Which, if you recall, it was 110 shares times the 3 rands, which is 330,000, right? So on this side here, you now just need to close it off, right? It's pretty simple now. It's pretty basic. There's not much work that is now required from you here. So this means that we can move on for time purposes. So with that being said, let us now move on to the next one, which is the dividends on ordinary shares, in order to make it more easier to understand on the same page. So for the dividends on ordinary shares, right? It is also pretty simple, guys. It is also pretty simple. So the first thing that you want to do is to write your interim, right? Your interim, which was indicated to be 75,000 rands, right? And then this amount here, we just bring it to this side like this. So all you need to do is just write the name of the account, which is your shareholders for dividends. Then you write the 330,000, right? Right, and then on this side you just write appropriation account. So if you add these two, you should get an amount of 405,000, right? And what did we say? We now need to bring this amount to the top. So simple as that, 405,000. You see, so you see how these two correlate. So just like that, you have your easy marks, right? You have all of your easy marks, they are complete. So with that being said, let us now move on. So we are now moving on to SARS and SARS income tax and income tax itself. So SARS income tax. We draw our ledger. However, you won't need to draw because obviously it will be given, right? So now the first thing that you need to write is your opening balance, right? And as you can see, the first adjustment said that the payments for SARS and shareholders were made. So with that being said, the opening balance, which is 130,000, right? You now transpose it to the side, right? So you write bank and you write the 130,000. Simple marks, guys. Simple marks, right? And then you write the income tax, the one from the income statement, right? However, here you didn't even need to do an income statement. It was just given. Income tax, right? Which is 450,000. Right? Just like that. And then on this side here, right? What you must just do is to add the provisional payments. So once again, you write bank, then you show your calculations, right? Make sure to show your calculations all the time. So here, the provisional payment, the first one was paid on the 31st of August, right? Which was 170,000. And the second one was made on the 20th of February 2025 and it was 195,000. So when you add these two, you will get 365,000. So now all you need to do is to just balance this out. So we look for the amount for the side that is going to be bigger. Now, without even calculating, you would just see that this is the bigger amount. So let us calculate though to confirm, because accounting is all about accuracy, guys. It's all about accuracy, right? So just to clarify here, this is 130,000, right? This is 130,000. So 130,000 plus 450,000 will give us 580,000 on this side, right? Just write it on the side, okay? And on this side, 130,000 plus 365,000 will give us 495,000. So it is clear that this side is the bigger side. So we write it on both sides, 580,000. Right, just like that. Then now we write our balance, which we must carry down. And then all we need to say now is just 580,000 minus 495,000. Then this should give us 85,000. You write it here. Then you write it here also, right? just write balance, brought down, and then you write your 85,000 here, just like that. Full marks for this part of it, right? And then the next one that we are going to do now is income tax, because like I said, these things are always related to each other. So income tax, right? So here it is very simple, guys. All you need to do is just take this and bring it to this side. So we write the name of the account, which is SARS income tax, right? Which is 450,000, right? And then we also write appropriation account here. And we write the same amount, 450,000, right? Just like that. Now for formality, you could just write it again on both sides so you can close it off like this. Just like this. And once again, you've gotten your full marks. So now we move on to the last one. And just like that, guys, you would have scored full marks on this section. So the last account is the appropriation account, right? It is the appropriation account. Right? We draw the ledger and we now get into business. We first write our income tax as indicated in the formulas that I've given. We also write our dividends on ordinary shares. Please mind my handwriting, guys. And the last one, we write retained income, right? So for our income tax, we had 450,000. For dividends on ordinary shares, we had 405,000. And for retained income, we had 685,500, right? Then here we write profit and loss. Excuse my spelling. And in terms of spelling, guys, you don't need to be perfect at spelling in accounting, because they're not assessing your ability to spell, they're assessing your accounting skills. So if perhaps you always tend to misspell words or so, don't be worried. As long as you get the right amounts and the marker can see what you are writing, then you should be fine. So if you add all of these amounts, it should give you 1,540,500, which you put on both sides, right? Like this. So just like that, we have done everything, right, for this topic. Now, don't follow me blindly. Go on, try all of these formulas and formats in past papers and all of that, and you will see that this is the most simplest way to do it and the most effective way to do it. So if you found this video helpful, please make sure to like, subscribe, and also comment the country which you are from. Not just, I mean to say, please comment the province in which you are from.
Academic Academy Essay. Lock in, learn, improve, achieve. Academic Academy Essay. Let's improve together.